Welcome to the Smart Property Investment Show with your host, Phil Tarrant.
Okay, everyone, how you going? Thanks for joining us on the Smart Property Investment Show today. It's interesting times for us here at Smart Property. We're always looking to grow and evolve, and how we sort of progress in terms of the policies around property investment will soon be played out, no doubt, as we get more information. But for me, it's all about ensuring, irrespective of what's happening in Canberra, that we're all focused on ongoing education and development and understanding how we can be better property investors. I get to do it at least twice a week on the Smart Property Investment Show. I use this as a learning tool for me to get greater understanding and appreciation of other people's stories and how we can share them to make sure that collectively we can all keep striving forward and creating wealth through property. And I'd be hard-pressed to find anyone that I know whose objective isn't to create wealth through property. There's not many people that do it just because they want to lose money. I don't know if anyone's out there doing that, but investors all shapes and sizes. If you've been listening to this for a little while, remember, please get in touch with the team if you'd like to come on the show. Editor at smartpropertyinvestment.com.au. We'd love to have you on, irrespective of where you are in your journey, whether you're just starting out or whether you've been doing this for a long time and you've got 50 and 60 properties under your belt. Everyone can learn something from everyone, and I do it every single day. And today it's going to be with a gentleman called Andrew Koleda. He's relatively new to property investment, but I won't go too much into it. I'll let him tell his story. Andrew, how you going, mate? You well?
Very well. Thanks for having me.
So you listen to the show?
I've listened to nearly every episode.
Okay. Is there anything that you particularly dislike rather than the ones that you really like? I'm sure there's something where you just sort of either ruffled some feathers or maybe struck a particular chord you didn't really agree with?
Not really. I think that you can learn something new from every episode, to be honest. So some of the things might not agree with 100% about my investing journey, but I think there's, like anything, there's always something to learn.
Yeah. So what do you think we're going to learn from you today? What's going to be the big headline takeaway? Let's do it at the front end and let's see if we can stress test it through.
Let's do it at the front end. I think from when I've listened to the podcast, I think I might have had a little bit of a different journey than some of your investors.
Okay.
A lot of your investors, or the flavour from what I hear, is around existing property as opposed to new. And when I started out my investing journey, I really started out with that mindset from a lot of the stuff I've learned from Smart Property Investment and some of the other podcasts and books. And then over time, I've actually made a bit of a transition into my thinking, and I have a couple of properties that I'll share some details with you that are new and coming off the plan, and I have a little bit of a different journey, I think, than some of the other people that I've heard on this podcast.
Excellent, because there is no one particular strategy which is right and proper. The strategy you're pursuing hopefully is right for you, but there are so many different ways in which you can approach property investments. So I'm conscious that often we have discussions around people buying existing property, whereas it sounds as though you're sort of gone down a path of acquiring new property, and I've been pretty frank with my thoughts and opinions towards that. I know a lot of people who have done extremely well buying a property off the plan. I also know some people who haven't had the best experiences. So maybe we can unpack your experience and see what we can learn from that. So you mentioned that you've sort of shifted your thought process away from existing type of from established property through to new property. What's been the driver of that sort of strategy shift for you?
Well, in terms of drivers, it was really about a case of serviceability. So in terms of my professional career, I've recently shifted from running a couple of different businesses and started up in running a new business. Okay. And from that perspective, I was in an environment where I was very committed to my goal of building wealth through property. But coming from a position of actually owning a couple of different businesses and starting a new business, and I was very committed to my goal of building wealth through property, but I was in an environment where I wasn't going to have access to finance. Okay. And for that reason, I chose to continue my journey because I didn't want to delay my plans that I had in place by utilising off the plan to buy some time in the property market.
Okay. So I think I know what you're getting at with that. So let's sort of unpack it for some people because they might not understand it. You're talking about being involved in property and being involved in the game, but by investing off the plan, you've got a gap between when you decide to buy a property and pay a deposit on a property and that actually reaching completion. So
correct.
This is what you're talking about now.
Yeah, correct. I was in a position whereby I had some available cash to use for deposits, but I wasn't in a position where I was actually going to be able to get access to finance in order to be able to settle the property right at that moment. So my decision-making process was to utilise putting my cash down for my deposit and stretching out for a couple of years when the properties were going to settle to continue my journey.
Okay. So you're still participating in property, but you're not actually able to get a mortgage. So therefore you put your deposit down 2 years' time, sort the mortgage out, and then hopefully at that point in time you've got a better property. So that comes down to really good asset selection.
Correct.
So tell us about the properties that you've acquired so far.
So my first property wasn't a new property.
Okay.
It was an existing property. So it was a 4-bedroom, 2-bathroom, 2-car place in Narangba in Queensland.
Okay.
I enlisted the services of a buyer's agent to help me to buy that property.
Okay.
And that was a bit of a journey in itself. The reason why I listed a buyer's agent was I was in a position whereby, being a little bit of an analytical person, I went out and did a lot of research. I listened to a lot of podcasts, including your own, read a lot of books. And then I was in a position whereby I had a lot of knowledge to some degree around, I guess, from a strategic standpoint, how to invest in property. But this journey took me a couple of years to actually to take place. Then I was in a position whereby I had too much information available to me, and I knew that there was no how I was going to be able to make a decision. And then it dawned on me that essentially, if a person has a legal problem, they'll go and enlist the services of a lawyer. If they have an accounting problem or they want to do their taxes, they'll go and enlist an accountant. But if they want to buy a $500,000 plus asset, for some reason, people have the perception that
I can do it myself.
100%. So for me, that didn't really make sense. So I made the decision at that point, and this is probably one of my biggest breakthroughs in my investing journey, to put my faith in professionals and choosing the right professional to help me along my journey, rather than taking it all on my own shoulders.
Okay. Fair enough, and that's probably reasonably sage, sound thing to do, right? Invest, and we talk about a lot on the Smart Property Investment Show. You pick your A team, make sure the people around you are experienced and within property and have your best interest front of mind to help you go down through those journeys. So you bought a 4-bedroom, 2-bathroom, 2-car, it's a pretty sort of meat and potatoes type property.
Yeah, 15 years old.
Yeah, how's that gone?
It's been going well.
Yep.
I think I purchased it at $390. It rented out for $420 within a week, I believe.
Okay.
It's been chugging along since. It's recently had a rental review. It was an interesting situation whereby the tenant actually sort of said to me, okay, happy to sign on for 6 months for another $420, or happy to sign on for 12 months if you reduce the rent down to $415. And for me, that was a very easy business decision to make, rather than paying the managing agent another week's rent.
Okay, yeah, that's simple probably. $5 a week for 6 months and work it out right. So that property then, you've then shifted into another property. What was the property after this one?
So the property after this one was a 1-bedroom apartment in Southbank, Melbourne.
Okay. Off the plan?
It wasn't off the plan. It was actually a new property, but a completed property, if that makes sense.
Okay, that makes sense. So is this before or after the changes in the budget to depreciation on new properties?
It was after the changes for the depreciation within the budget.
Okay, but being a new property and you're the first owner, you could still get those benefits
Correct.
from it. Okay,
Correct.
Cool. And that still stands, continues to today.
And it was a bit of a situation whereby at that time there was some significant stamp duty discounts available in Victoria for new apartments, which had since ceased. But because I was purchasing a completed property, so essentially purchasing the contract off the previous purchaser, the terms and conditions applied in terms of stamp duty that the original purchaser signed off on when they bought it a couple of years prior.
So they grandfathered those particular components of it, and you still got the benefits of it.
Correct, which equated to about a 90% saving on stamp duty for that purchase.
That's pretty good.
Yeah.
So what did you buy? A 1-bedroom apartment in Southbank?
1-bedroom apartment, no car park in Southbank. My mindset around that is Melbourne is a little bit different to, I guess, Sydney or Brisbane. With the existing tram infrastructure that's there in Melbourne, I was confident buying a place without an apartment. I was without a car park. And essentially my mindset was very, very simple at the time. I understood that Melbourne, my understanding is Melbourne is predicted by 2032 to surpass Sydney in terms of population growth. So I asked myself the simple question, hey, look, if today I could buy a $400,000 or so apartment 2 kilometres out of Sydney CBD, would I buy that? Would I feel that that's a good investment? So from a mindset perspective, looking at that in Melbourne and having the foresight to see what the population is going to be like and that city is going to be like in 10 years' time, it was a fairly easy decision.
So you're not buying for tomorrow, you're buying for the next decade and the decade after that.
Yeah,
So long-term wealth
10,
creation.
15, 20-year mindset on everything I do.
And how did you determine the price of the property that so you paid 400 odd grand for it? How did you come up with that number? Was that the contracted? Was that the value of the property per the previous owner that took it through the off the plan process, or was that just market value at that point in time?
No, that was the value of the contract that the original purchaser actually signed.
Okay.
So, again, in the mindset of, I think it was 2015 or 2016 that the original purchaser purchased that. So from that mindset, I was purchasing a property at the value of 2015, 2016 price in 2018, if that makes sense.
And was the value at 2018 higher than the value at 2015?
Look, to be honest, with that particular property in my situation, I haven't actually had it valued. Okay. I'm actually in the process of getting it valued a year on now.
Yeah. Did you do some sort of market sort of comparables around South Bank, around one bedders? Did you feel that the price point you bought it at was about right?
I feel comfortable in the price point, but it wasn't a journey of me actually going out there and investigating those particular comparisons.
Okay.
The organisation I was dealing with there in terms of their advice, once I actually understood they have their own in-house research team, and once I actually understood how they research and they offered me some comparables, I chose not to go out in there and do the research myself.
Okay.
So again, it comes from that mindset of I'd rather pick whom I choose to trust within the industry, and if I believe that there was no way that my research is going to be better than theirs. So providing I have that trust, that's where that decision came from.
And this comes back again to our original comments. The best property investors I know are ones who are continually investing in their education so they can make more informed decisions. So you need to be clear and have a true understanding of where the value lies with anyone that you use, and the fact that you have a trusted relationship with whoever you're using, that's your decision. A lot of people struggle to actually get to a point where they can make a decision to go, yes, I'm going to use this particular person to support me investing in property. So what's next for you then? Is there any more property on the radar, or are you currently you mentioned that you've sort of shifted jobs quickly recently. Are you in that sort of off the plan zone right now where you've put some deposits down and you're waiting for a completion?
Yes. So I have another 2 completing next year.
Okay. Whereabouts are they?
So one in the Gold Coast and one in New South Wales. So out western New South Wales.
Oh, like west New South Wales or Western Sydney?
Edmondson Park.
Where's Edmondson Park?
Near Leppington.
Oh, okay. Yeah. That's booming out that way. Leppington.
Yeah, close. Look, to be honest, that was a bit of a unique or a different mindset around that purchase within my portfolio, because what I've been able to achieve is obviously diversity in terms of the location that I have my investment properties, and that was quite a large component of my mindset. The second reason for that particular purchase is, and I know you really hate the term, but I'm a stereotypical rent investor, and I didn't actually own any property within New South Wales.
Okay.
So my mindset in making that purchasing decision, if you follow the portfolio, is I have 2 properties now in Queensland, or one coming in Queensland.
Yeah.
I have a property in Victoria. I wanted to actually own something in New South Wales. But my mindset around that is I think that there's a lot of development going on there in association with the Badgerys Creek Airport, a lot of infrastructure going along there. I purchased a 1-bedroom apartment with a car park directly across the road from a train station, built on 190 shops.
Okay. Is that by there's a train station there at Edmondson Park?
Existing.
The thing is that I sort of know west and northwest really well. I'm not as good sort of with southwest. I know where Leppington is. So I was out there the other month, and it's just property going up all over the joint. So you've followed sort of fundamentals of investing in investing somewhere where it's very close to infrastructure, close to transport, close to shop. But what are the shops out there? It's just like they're building shops?
No, they're building a brand new shopping
centre
out there.
Like a Coles or Woolworths going in there?
190 shops.
190, like a proper
shopping centre. Yeah.
Okay.
Like a small Westfield type of equivalent.
Yeah.
So for me, that was really a no-brainer of a decision to add to my portfolio. But having said so, with the mindset, obviously I had some concerns if I think about my decision-making process around what's going on in the Sydney market, and obviously, it's been widely reported around Sydney markets and, decline by 10, 15 or whatever the number is.
Yeah.
So I had some concerns about that when I was making my decision. However, the question I asked myself is, do I believe in the long-term fundamentals of Sydney as a property market? And then match that up, as you correctly identified, around fundamentals, around infrastructure, around future development around there. And within my portfolio, I've kind of hedged my bets, having property in Queensland, Melbourne, having something in Sydney. I could afford, even if it took longer for that growth to happen, I could afford to hold on to it for long enough for that to happen.
Are you concerned that the contract price that you, in a deal that you signed up at the time of putting your deposit down, exchanging, I guess, versus the value of the asset, the one in Edmondson Park, when it settles and you move, when you get the keys for it, which is when?
Next year.
Next year, 2020.
Yeah.
What's your sentiments towards the purchase price? Reckon it's going to come in at what you contracted at?
Well, look, I think that it probably will. But having said so, I guess my mindset changed once I started to understand a little bit around buying off the plan. Because if you really think about it, if you were to buy an existing property and let's say the market decline, like your 10, 15% that you've had in Sydney over the last few years, effectively you're in a situation, the exact same situation. I guess the difference being with an off-the-plan side of things, if the valuation was a little bit shorter because of whatever market conditions or whatever it may be, you're realising effectively that decline. Whereas with an existing property, you're experiencing that decline on paper, if that makes sense.
And how will you go about, at a point in time when the property is finalised and you get the keys for it, securing mortgages? You got no concerns at that point in time of getting a loan, considering your changing work situation? Is that something that's you got confidence around?
It's obviously a concern and something I thought about before I made my decisions. But ultimately, I made the decision to basically back myself and have faith in myself to have the ability to arrange the finance at that time. I also made a decision because I effectively bought myself, in inverted commas, 2 years. I made that decision that, hey, I've got a year to work on this new business that I'm working on. If that's not working out at that time, my number one obligation is obviously towards my portfolio. And because that's the best way I'm going to be able to generate wealth for my future. So I made the decision that, hey, at that time I could change course. There was always a way that I could gain employment elsewhere. In addition, budding relationship was happening at that time, so I could effectively utilise some of my girlfriend's income in order to settle. So I had a few redundancy ideas or concepts in place to give me that security to continue with that journey.
And I'll tell you what, also, when you go down this path, it keeps you hungry, right? It gives you a big goal. Correct. Because the goal is hard to move.
I think the saying is burn the ships to some degree.
Yeah, you've got to you've got to make sure you sort it out. Otherwise, you can on-sell it, like you mentioned when you purchased your place in South Bank, that you bought essentially the contract from someone else and you settled on it. So there was always ways around it should you not be able to meet settlement, but then it's down to the valuation of it as well. So
correct. And again, it's the fundamentals of investing that you speak a lot about on the show. It's around not just buying any old off-the-plan property, because obviously, as you're well aware, there's inherent risks with doing this. However, if you still stick with the same fundamentals, buying in the right areas, buying properties that do have owner-occupier appeal, your mitigating plans or your risk management is a lot easier to do.
So what's the future look like for you, Andrew? You've got these two properties which you're going to settle in. So where did you say the other one was again?
So Gold Coast.
Gold Coast, okay.
Yes.
Which we didn't really talk too much about. What is that? Is it a 1-bedder, 2-bedder?
That's a 3-bed.
A 3-bedder.
Yes.
Okay, like smack bang in the Gold Coast or out a little bit?
Just outside. So I stayed away from, I guess, the main beach side, away from all those high rises on Main Beach. And I still wanted access to the amenity that the Gold Coast has to offer with all the infrastructure that was built for the Commonwealth Games.
Okay.
But I took one step removed. So it's actually on Chevron Island.
Okay. Oh, nice.
Yeah.
That'd be right. And so the future for you then, is it going to be just sort out what you've got ahead of you right now, focus on growing out your new business, and then think about what's next in property, or you've got a plan?
No, correct. I think it's a little bit of hold and wait. Obviously, I've had quite an accelerated journey, and there's a few, in terms of my own personal side, I think there's a few other considerations, such as a potential principal place of residence, which I'm weighing up with.
Sounds like there's even more important merger about to begin at some point.
Well,
so is there some news there, is there?
Well, no, not just yet. Not that I can announce publicly.
You remiss me not to ask, but
no, that's fine. No
that's
worries.
Cool. So, what's your view towards sort of property markets in general? You mentioned we've had price decline in Sydney, Melbourne, depending where you are, up to sort of 15%. Who knows what's going to happen? But what's your thoughts or views?
Well, look, Obviously, those sort of statistics are really your headline numbers.
Yeah.
I think just as you share quite a lot on the show, there's always opportunities within every market. But having said so, I guess it's a combination of the two main factors is where do you think the growth's going to happen, but also having the ability to hold on to your investments for long enough to let the markets do its job.
Yeah.
So I believe there's opportunities, all across Australia. I'm focusing my efforts around the eastern seaboard to build out my, let's call it, I like to think of it like my base load portfolio.
Yeah.
I think there's a lot of other options, and there's like we started the conversation, there's a lot of different ways to make money within your within property. Commercials are a good example of that. But my main focus has been to try and build out my personal portfolio or my base load portfolio, and I was aiming for 4, so I've achieved, once those 2 settle, I've achieved that. And from that point on, I think we'll start to look at some different options for the portfolio.
Okay, that's cool. Well, all the very smart people I speak to on this podcast who have been doing this thing for years, when I ask them the question, when's the best time to invest in property, they always say when you can afford to invest in property.
Correct.
So to your point, irrespective of market conditions, there are opportunities if you know how to go and track them down and find them.
There's always going to be roadblocks and challenges. There's, I can't think of anyone that I've ever met that's ever got an email saying, hey, now's the perfect time to invest in property. The economy's right, the market's right, there's going to be guaranteed tenants. There's just no perfect time. And the one lesson I've kind of learned is to try and simplify my decision-making process around that. I've chosen property as my investment vehicle that I'm looking to build wealth for my future. And then once I've made that decision, it doesn't really matter what's actually going on in the property market at the time. It is when you can afford to hold that property. Providing you have that mindset, you can't go too far wrong.
Yeah, look, it's all about cash flow, right?
Correct.
If you can afford to hold the property and it doesn't become a burden, whether financially or, I know property that's broken up a lot of relationships, right? It can be stressful if you get it wrong. So if you can hold the property, that means irrespective of market conditions, and you can hold through tough or challenging markets, you can typically come out the other side of it looking okay and building for the future. But let us know, so these are settling 2020. So once all that happens, come and have a chat with us and tell us all about it.
Sounds good.
And, you've got a diversified portfolio in terms of you're in 3 different states, I guess, Queensland, Melbourne and New South Wales or Sydney, from 1-bedders to 4-bedroom houses. You still got the 4-bedder? Yeah,
still got the 4-bedder.
To 3-bedroom units in the Gold Coast. So you've got a good spread.
I think that's an important thing, from my mindset about building a portfolio is around not just diversification when it comes to location, but also diversification when it comes to asset class.
Type of asset.
Yeah.
Absolutely. And a lot of people get that wrong, right? So, appreciate you coming in and having a chat with Andrew.
No problems.
And keen to hear how it all goes. And make sure you keep connected. Keep listening to the show.
Will do.
But put a review there as well. Like this is probably my biggest beef with the Smart Property Investment Show. I'd like more reviews.
Okay.
So if you can give me a review.
I'll put out the word. I talk to a lot of people that listen to the show, so I'll see if I can get you
tell everyone about it. And I'll be maybe I should come up with some sort of I'm looking at our producer here, some sort of competition or something or other around reviews. I'd like more reviews. I'd like to know what you guys think. So it's important for me to help sort of shape the direction of the show if you let us know what you're thinking. And if you're one of those people that'd like to come and have a chat with us on the show, it's pretty easy. It is, Andrew. There's nothing.
Perfect.
But yeah, straightforward.
Yeah,
no worries.
No stresses.
You can, to do that, email the team editor at smartpropertyinvestment.com.au, or you can send us a direct message on the Facebook and we'll pick it up there. And if that's how you like to do your stuff, if you want to follow us on Facebook or any of the other social stuff, the handle is Smart Property HQ. And remember, press that subscribe button wherever you're listening to this podcast right now, so you get every new installment as it comes live. It'll go straight into your phone or wherever else listening to it, so you can keep connected with what's going on. We'll be back again next time. Until then, bye-bye.
The information featured in this podcast is general in nature and does not take into consideration your financial situation or individual needs and should not be relied upon. Before making any investment, insurance, tax, property or financial planning decision, you should consult a licensed professional who can advise whether your decision is appropriate for you. Guests appearing on this podcast may have a commercial relationship with the companies mentioned.